Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, August 8th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. Let's get right into it. So we're starting to see some of the July data releases come out here at the beginning of the month. Of note, the monetary-based data. Can you please share the key points on money supply in Japan with our listeners?
Okay. In July, the BOJ supplied the funds primarily through, firstly, JGB buying, 5 trillion yen. Secondly, returns of JGB lending, 2 trillion yen. And a third, climate change countermeasure operations, 1.5 trillion yen. The BOJ's net repayments of COVID countermeasure operations drove a negative 11 trillion yen decline in Japan's monetary base. As a result, Japan's monetary base shrunk from 677 trillion yen to 665 trillion yen. The battle with foreigners and the Japanese investors against the BOJ over the 0.25% fixed rate JGB bond operations has ended, and JGBs short positions were covered and returned to the BOJ, and JGB lending has contributed to supply of yen funds. At the same time, the BOJ has implemented 1.5 trillion yen in climate change operations. But this is a small amount relative to the scale of decrease in a monetary base overall. We think the BOJ may make some revisions to the climate change operations in the latter half of this year.
Yeah, I know that sort of data can be a bit dry, but it's just I think it's critically important that people understand, despite how many bonds the Bank of Japan is buying, that it's actually the monetary base is actually contracting. It's really extremely counterintuitive. So moving on to some other data, we also received the international transaction in securities data that was released on Monday the 8th. We're recording the podcast Monday the 8th in New York and Tuesday the 9th in Tokyo. So very timely data. Let's start off with Japanese investors. What were they doing in foreign bonds during the month of July?
The Japanese investors unloaded foreign securities at a slow pace in July by 688 billion yen, according to the data released by the Ministry of Finance on August 8th. Japanese investors bought foreign stocks and investment fund holdings at a faster pace, 1.8 trillion yen, sold less medium to long-term foreign bonds, 2.6 trillion yen, and became buyer of short-term foreign bonds, 116 billion yen. The net selling of medium to long-term foreign bonds was overwhelmingly driven by, firstly, lifers, who dumped a net 1.5 trillion yen, as well as, secondly, the pension funds, trust funds, who sold a net 865 billion yen. In contrast, Japanese banks bought 179 billion yen, the first time they net bought foreign bonds since October of last year. Foreign stocks and investment fund holdings net buying was supported by, firstly, the Toshin Investment Trust, 755 billion yen. Secondly, pension funds, 748 billion yen. And thirdly, Japanese banks, 375 billion yen. Japanese retail investors and pension funds actively bought foreign stocks, while Japanese banks were active with alternative investments. Japanese banks began to rebuild their foreign bond positions in July, while lifers unloaded foreign bonds at a faster pace and appeared to have slowed in buying the super long JGBs as they took losses on their foreign bond positions. Lifers also held off from alternative investment in July, while Japanese banks began to expand their dollar and euro credit investing exposure via investment funds. Since the beginning of fiscal year 2022, Japanese investors reshuffled their foreign securities portfolios and began to rebuild their foreign asset positions after a delay, largely with alternative investments in July, after general shareholder meetings ended in June. Looking ahead, Japanese investors could be active buyers of foreign securities after the Obon summer holidays, even ahead of the September quarter end. However, yen basis costs are fairly high, and we think that Japanese investors could show interest in dollar credit and dollar stocks.
Wow, that's a couple couple things that I really want to highlight. You said a lot of interesting stuff there. But so in July, you have Japanese investors buying more stocks, selling less bonds, and becoming buyers of short-term foreign bonds. So that's a pretty big
Right,
sea change.
right.
But at the same time, Japanese life insurance companies sold a huge amount of foreign bonds. I don't know if it was a record, but it was probably pretty close to it. So
Mhm.
a lot of different cross currents there. So let's keep on the cross-border flow topic, and let's instead talk about what foreign investors were doing in Japanese financial markets during the month of July. As you reported in a recent research piece, they bought a huge amount of Japanese bonds. What exactly drove those inflows?
Okay. The foreigners' net buying of domestic Japanese securities surged to the 12 trillion yen. This included net buying of short-term yen bonds by 8 trillion yen, medium to long-term yen bonds by 5 trillion yen, and Japan stocks and investment fund holdings by 1 trillion yen. Foreigners have been covering their JGB short positions after losing another round of the battle against the BOJ's yield curve control policy. We believe foreigners may have room to actively accumulate more JGBs going forward.
Yeah, it's been a losing trade to bet against the BOJ for about as long as anyone can remember. Feels like that
Mhm.
trade could be, more right than it ever has been, but a lot of a lot of tough trades there, including
Right.
this past month. So why don't we do this? Why don't we wrap things up? But I don't want to do that without getting your outlook rather on yen rate, spot dollar yen, and yen basis markets here in the month of August.
But officials remain concerned about inflationary pressures, and U.S. economic data have been fairly robust. Speculation about the U.S. economy entering a recession have lessened. Over the near term, July, the U.S. CPI data will be a trade trigger. We view current inflation stress as entrenched. We now see a bullish bias rather than neutral bias for Dalian, and I expect the Dalian to trade in a 3 yen range between 133 to 136. The yen swap rate curve has been a really tight range and neutral. The Japanese financial sector's April to June fiscal year 22 earnings revealed sizable valuation losses on marketable securities. Earnings release proves the selling of foreign bonds and JGBs. The Ministry of Finance holds a 30-year JGB auction on August 9th, but this is unlikely to be a major volatility trigger factor since the Japanese are flush with cash after selling their JGBs and foreign bonds. There will be only the one 6 months TDB auction this month on August 9th, so we suspect it will see the strong demand. We now maintain our view of neutral bias for yen rates. The yen basis curve is tightened. The Ministry of Finance weekly securities data for July 24th to 30th shows that the Japanese continue to net buy the foreign securities by 267 billion yen. This included net buying by 336 billion yen of foreign stocks and investment fund holdings, and 37 billion yen of medium to long-term foreign bonds, as well as net selling by 106 billion yen of short-term foreign bonds. Japanese have been actively buying the foreign stocks and investment fund holdings for 7 straight weeks, and net bought medium to long-term foreign bonds for second week in a row. Japanese have slowly begun to rebuild their foreign bond positions. Over the same period, foreigners net bought 176 billion yen of Japanese securities, including by a size of 1.2 trillion yen for medium to long-term yen bonds. They also unloaded a net 999 billion yen of short-term yen bonds and a net 120 billion yen of Japan stocks and investment fund holdings. Foreigners have shown an active appetite for JGBs. We expect the Japanese and the foreign investing flows to balance out over the Obon holidays and the yen basis to have a neutral bias.
Okay, so we're bullish dollar yen, and that of course comes after some pretty perplexing, decline in the pair, somewhat recently. Neutral on JPY rate as the BOJ successfully defends the upper band of the yield curve control yield target, and neutral on the basis as Japanese buying of foreign assets seems to balance pretty well against foreign buying of yen assets. All right, well.
Okay.
Great stuff, Sekido-san. Thanks again for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.